Good afternoon. Why new vintage mortgage? Well, perfect question. You asked the right guy. Of course, I have my bias. I have a huge bias, mortgage brokers, and we're a mortgage broker. We are not tied into any lender or any bank or any mortgage bank. We don't have our own mortgage bank. Most mortgage brokers are bankers, which means their allegiance is to their bank. And as bankers go, we talk about some of the big banks, Bank of America and Wells Fargo, their employees are tied to their banks. And that can be, sometimes that can be good. Most of the time it's a disadvantage for the consumer, in my humble and biased opinion, because they can only offer you what they have to offer. And if they're trying to narrow in on certain products or certain programs, that's what if they have something to sell, they want to move something, then that's what you're going to be mostly exposed to. And oftentimes that becomes programs and products that are inflexible to your situation, and or the interest rates are higher. The process may be more difficult and more challenging. And so from our standpoint, a mortgage broker's lack of allegiance to any entity, we just work for you, is the key reason we choose a mortgage broker over a bank or a mortgage bank. From that point, I would say, what about new vintage mortgage? New vintage mortgage, first of all, we start with the philosophy that we can't properly help you unless we understand almost everything there is to know about the mortgage market. And it's my belief and my philosophy that we should know what's out there to solve I don't want to call it the problem, but to solve the financing, to offer a financing solution that you're looking for, to solve that problem, if you will, buying a home, lowering your interest rate, helping you with your retirement plans, your estate plans. We should understand all of the products in the industry. So the way I like to describe it is that you can imagine some of the things you've heard about. You've heard of government loans. If all the mortgage products in the United States were on a bell curve, would describe that is, on one end of the bell curve, you have your government loan sponsored loans. You have your FHA, your VA, which is a Veterans Administration loans, the FHA, VA, USDA loans for homes and farms in the U.S. agriculture districts. Those are the government loans on one end of that bell curve, far end of the bell curve. In the middle of the bell curve are your conventional and conforming mortgages. So these are conventional mortgages, of the typical mortgage that follows typical rules and protocols, and we all mostly understand those. Conforming mortgages are those conventional mortgages that conform to Fannie Mae and Freddie Mac's guidelines. That's the big bulk of the bell curve. On the other side of the curve are construction loans, private money loans, bridge loans, loans that outside of the box of your normal lending parameters, they're used to solve different problems. One loan that I would describe in that other side of the bell curve is a home equity line of credit, or a HELOC. That's not a conventional loan, but it's a loan that is many people have, many people take advantage of, and it's just outside of the box of your normal conventional loans. There's so much more to talk about when you talk about loan programs. And for example, within those conventional loans, you have your jumbo loans and you have your conforming loans. We just talked about conforming loans a little bit. Jumbo loans are outside of the conforming loan limits that Fannie Mae and Freddie Mac have established. And a jumbo loan can also have a very interesting characteristics, but they're still conventional loans. And we'll talk more later about the jumbo loans and the portfolio lending community, and how they can offer so much more in product lines than Fannie Mae and Freddie Mac can. And being a lenders own those loans throughout the life of the loan at their banks. So back to mortgage brokering and New Vintage Mortgage and the advantages of working with us. We are a small shop. We are very flexible in our dynamics, our pricing. Even though we're a small mortgage company, we have dozens and dozens of relationships with lenders. So we can actually offer solutions, more solutions than a bank can offer, because we are brokering to any solution that might be out there in the mortgage market. I hope that helps describe a little bit about New Vintage and the advantages of going to a mortgage broker.